Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're digging deep into Lithium Americas, ticker LAC. There's been some pretty big news about potential U.S. government involvement. We're looking at data from September 24th, 2025, and the question is this stock surge running on pure political hope, or is there something more solid behind it, maybe just fumes?
Yeah, it's a fascinating mix, isn't it? Geopolitics meeting market valuation head on. But maybe first, let's just quickly set the scene, the sort of market mood.
Good idea.
Futures are a bit split. Tech is looking okay, maybe green, but industrials are lagging behind. And this is interesting when you put it against the OECD's view. They're seeing things differently.
Right, our research picked that up too. The OECD, they gave the U.S. economy a thumbs up for 2025, mostly because of AI investment, right?
Exactly.
But then, almost in the same breath, they flagged a potential slowdown for 2026, mostly blaming potential tariffs.
And that tariff talk, that global instability, it shines a spotlight right back on LAC. Well, if global supply chains get stressed, maybe by trade wars, then LAC's Thacker Pass project in Nevada, it stops looking just like a mine.
It becomes strategic, a domestic supply thing.
Precisely. National security, almost. And that leads us straight to the big catalyst. The government's talking to them, negotiating a huge potential loan. What is it, $2.26 billion?
Oh, yeah. That's substantial.
And it might even include the government taking an equity stake, maybe up to 10% in the project itself.
Okay, that's definitely a strong signal from DC, a real vote of confidence.
Yeah.
And the market reacted instantly. The stock, it jumped from around $3 to $5.13 in pre-market trading?
It did, a massive leap.
But here's the tension, right? That $5.13 price, it landed smack dab on the consensus analyst fair value target.
Exactly the problem.
So the good news hit, and boom, the price instantly reflected it. Is the optimism still justified, or is it all kind of priced in now?
Well, that's the reality check kicking in. The stock went vertical, sure, but Wall Street, they're not exactly throwing a party. Our research shows over half the analysts are still sitting on a hold rating.
A hold? Even with a potential government backing?
Yeah. They're waiting. They want to see actual progress, dirt being moved at Thacker Pass. So that political catalyst has just slammed right into a valuation ceiling, basically. It's like, okay, great news, but show us the lithium.
Okay, so analysts are cautious, playing it cool, but then you look at the options market. Totally different story there. Options traders seem incredibly bullish.
That put-to-call ratio is really low, just 0.54 based on our data. How do we square that circle, that huge disconnect?
Volatility, that's how. You reconcile it with pure volatility. See, before this news broke, short interest was pretty high, about 11.48%. A lot of people betting against it.
Ah, okay. Setting the stage.
Exactly. So that sudden price surge, perfect conditions for a short squeeze, all those bears getting forced to buy back shares to cut their losses.
Which just adds fuel to the fire.
Yeah.
Look, jet fuel, yeah. Any positive development now really punishes anyone to still short the stock.
And you can see that play out in the technical charts too, I bet.
You can. The stock definitely carved out a new bullish trend, which frankly is a big win after months of decline.
But there's always a but.
But the momentum indicators, they're screaming overbought, flashing warnings. Short-term exhaustion seems likely.
Like it ran a marathon in a single session.
Pretty much.
Yeah.
And now it has to prove it can stay at this higher level.
So bringing it all together based on our research, the outlook is cautiously bullish.
That's our take, yes.
Yeah.
Cautiously bullish. But for you, the listener, the number one risk to flag is deal risk.
Because the negotiations aren't finished.
They're not final. They could still fall apart. And if they do, those gains could evaporate fast. Plus, given those exhaustion signals we mentioned, a short-term pullback seems, quite likely.
So it's not just about mining fundamentals anymore.
Not at all. This has become a political risk play. You're betting on Washington as much as you're betting on Nevada dirt.
Okay, so key levels to watch. Where's the battleground?
It looks like the fight is between that new $5 level acting as support
Okay.
and the resistance up near the after-hours high, around $6.10.
And if it breaks down, what's the O level?
A decisive break below $4.50.
Yeah.
If it falls below that, it probably signals the rally has failed and that political optimism just wasn't enough.
It really has become this fascinating geopolitical chess piece, hasn't it? Redefining its whole future beyond just digging stuff out of the ground. That's all for this deep dive. Remember, this deep dive is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next deep dive.